Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index traded near 100.9 on Monday, supported by escalating tensions in the Middle East. Renewed US strikes on Iran pushed oil prices higher, raising concerns over inflation and interest rates. Markets now see a 53% chance of a Federal Reserve rate hike in September, although rates are widely expected to remain unchanged this month. WTI crude jumped more than 3% in early Asian trading on Monday, briefly rising above $84 to a one-month high. Escalating tensions between the United States, Iran, and Israel have sharply increased supply disruption risks. WTI gained around 15% last week as market attention shifted from inventories and demand towards geopolitical risk premiums. Spot gold weakened slightly on Monday, briefly falling below $4,000 to $3,982 before recovering towards $4,010. Rising oil prices, stronger inflation concerns, and a firmer US dollar continued to pressure the metal. Gold recorded its largest weekly decline in 6 weeks last week, although heavily oversold conditions may still create the potential for a technical rebound. The Japanese yen traded near 162.45 on Monday, close to its weakest level since 1996. A stronger dollar and surging oil prices continued to pressure the currency. Japan's heavy dependence on Middle Eastern energy imports makes the yen particularly vulnerable to supply disruptions, while investors remain uncertain about whether Japanese authorities will intervene to support the currency. The euro traded near 1.142 on Monday, supported by a relatively hawkish European Central Bank. The ECB is expected to keep rates unchanged this week, but rising energy prices could lead to another rate increase in September. However, escalating Middle East tensions may strengthen safe haven demand for the dollar and limit further euro gains.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.